Hello and welcome to another episode of the AutoTrader Podcast, SA's number one motoring podcast. My name is Wandile Sishi, once again joined by the one and only, the myth, the legend, George Mienie. How are you, George?
I don't know if all of that rest of that is true, but but thank you, Wendy. I appreciate that. I'm good. I'm just I'm happy that Formula One is in a place where it's anybody's win.
It's back. Mercedes is back, is what you're trying to say. Basically.
Well, yeah. I mean, I think they deserve a flying shot at least, so that there's three teams up there. You know, I'm hoping that Bottas kind of gets a bit better. You know, so that he can stick it to Mercedes.
Why do you want him to stick it to Mercedes?
Because they shouldn't let him go. Look how good he is.
He's good. He's good.
But I must be honest, George Russell is...
He's doing well.
He's doing well.
He's doing better than...
He's doing better than Hamilton. And I think...
For now.
I think Bottas would have been doing better than Hamilton too.
P19 to P5, I think is a fantastic...
No, it's a fantastic result.
Job, yeah.
I think it's a fantastic result. Yeah. And, you know, nothing off his show over the weekend. And,
But we're going to Monaco, so it's going to be... We'll see... That's where we separate the boys from the men.
Yeah, I think the Ferraris are going to be go wipe the floor there because they
should be.
Yeah, they're good on the slow tracks.
Yeah,
you know.
Anyways, there's a little bit of a new setup in the studio. I don't know if you've
noticed.
I mean, you're here with us, but
no.
Yeah, it's looking as new studio, new team, new us. So you know.
Well, not really
good.
A new studio,
None
but
of those things are
but it's the first time we're using this area.
Yeah, for sure.
And so we're trying it out for today. If it sticks, we're going to keep it. You know, if it doesn't, we'll be back to the old racing chairs.
Maybe we can ask the viewers. You guys can comment and they can decide if they kind of like this new look and feel.
We like it.
We love it.
We love it.
I love it.
We like it. So let's see.
So before we get into the show, I actually, we recently came back from Durban.
Uh-huh.
And I had a chip on my windscreen. I don't know if you heard.
No.
Yeah. So I'm investigating what happened there. I don't remember it being there before. And in the inspection, it said that it was not there.
Chip on your windscreen from where? From
like when I picked it up. There was a...
the parking company.
Yeah.
Let me tell you,
Yeah.
years ago, maybe, you know, this is good 7, 8, 9 years ago.
Yeah.
I used to use those parking services at the airport.
Yeah.
Don't want to diss them, but
You've had some issues as well.
my car came back bumped.
Huh.
Yeah, the mirror was scratched.
Yeah.
Wherever they parked it too close to something.
Yeah.
And the mirror had a scratch on it, and nobody highlighted it. Nobody said, "Oh, sorry, we bumped your car." It was just because I only noticed it when I got home, but now you've already done an inspection.
Exactly.
You know, and you've taken the car.
Yeah.
So I left it. It wasn't a big deal, but my car was definitely scratched.
Yeah, I mean, mine was marked as, you know, nothing's wrong. And then as soon as you got out, because it's dark inside the airport, but as soon as you come out, then you realize.
Windscreen chip.
And I couldn't go back because it's the highway.
Well, let's do something about it.
I'm trying. It's in the process.
I'll help you.
Anyway, so coming back from that, one of the things that actually happened at that event is one of the dealers brought up something that was quite interesting, which was he was noticing that there's more rejections for car financing. It's not to say that more cars are being...
Well, rejections, what do we call it? Approvals. Approval rate is down.
Exactly.
Yeah.
There are still more cars that are being approved. That's not the problem. There's still more consumers buying cars. But in terms of the absolute number of people getting rejected, he's noticed that there's, you know, kind of a situation there. So
rejected is such a strong word.
It's stuck in my, because I've seen the videos and the images of like rejected, so it's kind of stuck in my head.
You feel rejected.
Exactly. So the question today is really about how to avoid getting rejection, or how to get approved car financing more specifically. So I did a little bit of
avoid the disapproval.
To avoid the disapproval, exactly. So I went and looked on Ask AutoTrader, and there was a question. I was hoping you can actually answer it first, and then we can get into the reasons of why this could happen. So somebody asked on Ask AutoTrader, I've got the person's name, my apologies, but they asked, I've been declined by a bank for my car financing and I want the car. I'm permanently employed and I earn a decent salary. Why do I keep getting this disapproval? What are the reasons that could potentially be the reason for the disapprovals?
So let's talk about what goes into getting finance on a car.
Yeah.
I think the first thing is your credit rating.
Yeah.
Right. Okay. So everything if you cannot have a great credit score if you don't have debt. Okay. So people think that debt is a bad thing. It's not a bad thing if managed properly.
Yeah.
It actually
In fact, it's a good thing.
it's a good thing. It
scenarios
increases your credit
managed.
score.
Exactly.
Yes.
Exactly.
So if it's managed correctly,
Yeah.
it can be a good thing for getting finance. If you have no debt and you I've heard a lot of people like anecdotally say, "Yeah, I don't have any debt, but I can't get a loan for this particular car."
Yeah.
And that's because you haven't had debt. The banks don't know what kind of a person you are
Yeah.
and how you would pay that debt back.
Well, they don't know you, right?
They don't know you.
All they have is information
They've got
based off your behavior and what you be doing.
Yeah, exactly. And you haven't been doing anything.
Yeah.
You've had cash in the bank.
Exactly.
Right. So it's almost a world where, we've got to accept the fact that the world runs on debt.
Yeah.
Like, how does a
100%.
bank create money? Creates debt. That's
Exactly.
how the world works. So if we accept that, then getting a good credit rating from the credit bureaus is an important thing to keep your eyes on. Okay, so it could be that his credit score or her credit score is not great. In which case, you're going to have to sort that out, and and there's ways to do that.
Would you say that's kind of the main sort of factor?
No, I think they've got
A few things.
there's a few things that are like either weighted more or less. So that's the first thing, is your credit score, credit rating. That's what the bank's going to look at. The second thing they're going to look at is affordability.
Okay.
Okay, can you afford the car?
Based off what? Your other things that you kind of own, basically your other expenses during the month.
Yeah, so they're going to ask you about what's your income,
Yeah.
what are your expenses, how much disposable cash have you got at the end of the month in order to pay back this loan? Do you have enough money at the end of the month to pay this loan comfortably? And there's ratios bandied about in terms of, you got to at least 20%. You got to have 20% free cash available in order to pay the loan. Some people say 30%, but it largely depends on the bank's scorecard and how the bank sees their particular portfolio of loans, where they find themselves in their credit risk appetite. So that's another factor. So kind of probably 2A is the bank's appetite for risk.
With regards to affordability, we've spoken about it before, and I think I've read somewhere that you should be around 30% of your, is how much you should kind of budget for.
Yeah, exactly.
Anything more than that is you can't afford it.
Pretty much. So that's the second thing, is affordability. They're going to calculate your affordability. They're going to ask you for a bunch of documents, expenses, and and a report on your affordability. Then the third element is what's called equity in the car. Okay, so is the car you're buying, like, if it's let's say the bank thinks the car is worth 150,000 rand, but the car's being sold for 160 because it's really low mileage, it's a clean car, and the dealer is selling it for 160. Okay, now this is not the dealer's fault, right? It's a clean. You're not going to get a low mileage, good quality car like that very easily. And the bank doesn't see equity in the car, okay, or they think the car is, not priced the way they see the pricing.
Either what, like price lower than its market value based off.
Well, market value is a very, very difficult word, because what is market value? Market value is the willing buyer, willing seller element.
Yeah. Well,
right?
let's just say there are records of how much this car would be.
Yeah. So if they take all the cars in the market that are the same as that, they're not necessarily going to take mileage into account as much as maybe we would, but they do to a certain degree, and this is where you can get the dealer to go back and argue on your behalf.
Okay.
So
in terms of
the equity in the car.
Yes.
So you can have the dealer go back to the bank and say, listen, this is a low mileage, really clean car. I think your calculations are wrong. Yeah. Right. And
what are the chances of that actually being like overruled or
the dealer can, if the dealer's got a good relationship. That's why it's best to get car finance
through the dealership.
Don't come with your own car finance. Now, there's two elements here that we probably can have a sidebar on, and that is, have you ever gone to a dealer with your own finance or cash and said, but I've got my own finance, I got cash, I want a discount? That's the worst scenario.
Yeah, because the dealer can't help you now if in a scenario like this.
Well, in a scenario like this, no. But dealers dealers make commission from
Yeah.
the finance that they
Yeah.
that they give you, right? So they can get you the best finance. There's no private banker that can beat a dealer.
For sure. Sure.
You know, so because the dealer has a relationship with the banks, the dealer can get you a better deal.
Okay.
So in this equity thing in the car, and what I mean by equity in the car is the car is worth more than the bank thinks it's worth.
Yeah.
Right. The dealer can go back and argue your case. Now, sometimes they can't help you, but yeah, I've seen a lot of cases where they can.
Yeah.
So that's the third element, is equity in the car.
This is something that I guess the car shopper in this scenario has no control. But the first two, they have control. The third one is more of, it's kind of,
Well, it's the car.
banks
It's the
getting
car you
involved.
select, right?
Yeah.
The car you select is the one that is where you have the control. Is if you select a low mileage car, and you do your homework and you say to the dealer, like, why am I getting disapproved here? Is it because of my credit score? Is it because of the affordability, or is it because of the equity in the car? Now, you can create equity in a car, so you do have control.
How do you create equity in a car? This is super insightful because I think a lot of people are,
Bigger deposit.
So
So if you put a bigger deposit down,
yeah.
it lowers the equity risk
Okay.
in the car.
What about balloon payments in that scenario? Would you?
Well, that goes down to affordability.
Okay.
So you can lower the monthly payment and get into so you can use the balloon payment
As kind of your leverage.
as your tool
Yeah, like
to
a
get
lever.
into the affordability bracket,
Yeah.
right? And then your credit score, obviously, you have to play with, or should I say, manage over time.
These
So
are
you-
the cheat codes of buying a car, basically. That's what this episode is.
Well, I mean, like you said, you've got no control over the equity. Yes, you don't in terms of the price of the car and the way
Yeah.
the bank potentially sees it, and you can have a discussion about that.
Yeah.
But you can create equity. Put a 10 grand deposit. Put a 15 grand deposit down.
But imagine that affordability and that time, the
Yes.
repayment time. Yeah.
So you can probably get a better deal from the bank if you play with those three things.
Yeah.
So if you manage your credit score over time, and you get a really good credit score, and your affordability is in a good place, and you play with the finance deal to get good affordability, right? And then you create equity in the car by putting a bigger deposit, and then you go back to the dealer and say, can you squeeze the bank for a better interest rate?
And the dealer's always going to be on your side, right?
Yeah.
They want to sell the car ultimately.
No, of course.
Yeah,
They're
that's-
going to be
that's
on your
the-
side.
that's
Everybody
Everybody wins. And that's,
they'll go back and they'll squeeze the bank.
okay, so I think that answers that question in probably the greatest detail we've ever been able
Well, I
to
hope
do
it
in Ask AutoTrader. But let's talk about the 5 reasons of why an application can get rejected. We've done a few articles on this, so if you are interested in finding out more, you can find all these articles on AutoTrader.co.za. But the first one that is mentioned is, like you've said, an unhealthy credit score would be, one of the top few reasons why you'll get rejected. Or not approved, more specifically. So if your credit score is between 681 and 999 points, then the probability of you getting that car approved or that financing approved is a lot higher. So when you are doing these checks, make sure that it's between that range and you're more likely to essentially be approved.
Yes. So the credit bureaus score you as an individual.
Yeah, as in like your risk essentially for them.
Yeah, so your risk in the market as a payer, they'll give you a score, and it's based on a whole bunch of factors, and those factors are how you pay your current debt or your historical debt.
Yeah.
And like you mentioned, 681 to 999 is a good credit score. Try and get it as high as possible.
Do you have any idea of what's the kind of the average number that most people are, let's say they're going for, I don't know, your average consumer?
I know a lot, but I don't know that.
Yeah, I mean, I'm asking you really intense insurance questions. I think it's a bit unfair.
So I don't know. I mean, the average credit score out there, maybe something we can Google. What is the average credit score that consumers have? And a lot of people don't manage their debt effectively, and they get a bad credit score without even knowing it.
Yeah.
You don't.
It's
Nobody's
not
going
something
to.
that you're doing every single month. Let me check my credit score.
No one's going to send you a notification saying, "Oh, your credit score dropped."
Yeah. Yeah.
So probably something you must do every 3 months or so.
I agree.
Just go and check what your credit score is.
Also, it must also highlight things that are maybe happening in the background that's fraudulent in terms of your identity being stolen. You don't even know that things are happening. So 3 months, I think, is kind of a good.
Yeah.
But there are things you can do to kind of address this. George has kind of spoken them already. But one of them is start saving for a down payment. It really, really, really helps having that deposit, the higher
Create the
deposit.
equity,
Yeah.
create the debt, pay
Exactly.
it back effectively, improve your credit score.
And close any accounts that you're no longer using is another thing. So it's just any outstanding debts that you have that you're not necessarily, kind of utilizing.
Yeah, your debt level feeds into your credit score. So, how much debt you have.
Yeah.
Like there's a limit to that.
For sure.
And sometimes I've heard bankers express it in multiples of income.
Okay.
So, you can't have debt that is, more than 50% of your annual income, or you can't have debt that is, more than 5 times, 10 times your monthly income, or something like that. And don't use the 5 and the 10 because I don't know the answer. But I've heard bankers express it in multiples.
Would you say that in terms of your debts, let's say you have, I don't know, you're paying off 20 different accounts, but you are paying them all off. Does that count in terms of how much debt you have, even though you can technically afford it?
Well, remember, every bit of debt that you take out drops your affordability.
Okay.
Because you've now got something extra to pay.
Extra to pay, yeah.
So while having debt is a good thing, managing it properly is a good thing, you do reach a point where you just can't afford any more debt according to the banks, and so you just got to kind of be cognizant of your affordability. So that gentleman or lady that had that question, there's 3 places that you need to go and look, and that is equity in the car, credit score, and why, and then your affordability.
Understood. Next reason, the second reason, is economic instability and inadequate income. You've spoken about this, so this is more so your affordability than anything else.
Well, let's address economic instability. So bank appetite for risk will feed from the economic environment.
Repo rates and basically what's happening on the macro level.
On the macro level, yeah. So banks' appetite for risk, because remember, banks are business too.
Yeah.
So and they have rules. There's banking rules that that get dictated by the
like the Reserve Bank.
The Reserve Bank, that's the word I was looking for. The Reserve Bank. I was thinking of the American term, the Federal Reserve, but the Reserve Bank in South Africa will dictate some of those rules.
Yeah.
So and monetary policy, so they are bound by those things, and their credit risk appetite depends on how much debt they have on their books at the moment. So if you, another customer that they can't afford to bring onto their books, their credit risk appetite comes down.
Okay.
So don't take it personally. It's not only about your...
Yeah, that's what's happening in the markets.
Yeah, so there's an economic thing going on there, and so that's why apply to multiple banks, because different banks will have different credit risk appetites at different times for different reasons.
That's why it's nice to go straight to the dealership, because they
they do it all for you.
Yeah,
exactly. They do multiple applications for you.
Okay, so basically, how to counter this problem is look around. Actually, well, George just said it now. Go to the dealership and try and see what levels each bank is at, and who knows, it could be the difference between you getting approved. Next one is incomplete paperwork. It's kind of a simple one.
Well, I mean, we're talking about the top 5 reasons people get rejected, right?
Yes.
Like, that's just, for me, that's just lazy.
Yeah.
Like, you can't expect to get finance if you fill out the documents, half-heartedly.
Yeah.
But I can't believe it's the third reason people get rejected.
It's a real reason. Finish your paperwork and
leave a couple of digits out of your ID number. It's not gonna
misspell your name. It's not going to work. You need to get those things right. Next one is parallel loans. So this is quite simple, but basically refrain from having too many high value loans at the same time.
Well, we were talking about this just now. It's the amount of debt, the quantum of debt that you have in total.
Yeah,
that's going to play a part in your credit score.
The last one is something that I don't actually know about. It's called credit card utilization ratio. Do you know anything about this? But I know it has something to do with how much you use your credit card in essentially getting your credit score at a decent position?
Yeah. So this is the principle to use here, right? Is when it comes to a credit card.
Yeah.
This is just my own opinion and it plays directly into credit card utilization.
Okay.
Credit card is not a long-term debt thing.
It's supposed to be for just real quick short-term debts.
The way you're supposed to use a credit card, okay, is, and I'll tell you the reason why now. The way you're supposed to use a credit card is you spend and then you settle the entire thing. Then you spend and for a month, you settle the entire thing. What does that get you? Have you ever heard the term use other people's money?
Yeah.
Okay. Credit card is using other people's money, right? Because you get 52 days of free credit interest-free.
Okay, interest-free credit.
Interest-free credit if you settle the entire balance at the end of every month.
Okay.
Okay.
These are the cheat codes.
These are the cheat codes.
Hope you're writing it down, guys.
Okay. So you get literally you get the month that you spend, you get another month. And it works out to about 52 days because you don't spend like at the beginning or at the end of the month. You spend evenly through the month.
Yeah.
Okay. So therefore, the month that you spend, you'll get your credit card statement.
Yeah.
Okay. Then you'll have to settle that within a period of time that the bank dictates afterwards. Okay. 15 days, 30 days, whatever. Okay. If you settle the entire credit card, you pay no interest on what you spent unless you drew cash immediate interest, right?
Yeah, of course.
Out of the credit card. So don't draw cash out of your credit card. It's expensive. And then you're spending again. So there's this cycle. That's why it's called the revolving credit. There's the cycle. Whereas when you max out your credit card or you use a high level of credit facility on your credit card and you don't settle it regularly, right? That is a negative effect. And that's that credit utilization ratio.
I see.
You're not using your credit card to its max if you're spending and settling. Because most people's credit card limits are higher than their monthly income anyway.
Yeah.
You max that out, you.
What if you increase your limits? Your let's say your credit limits.
Well,
is that worse or?
Well, if you use it all and you can't settle the whole thing, then that's problematic.
You're going around in circles then.
Yeah, exactly. So you're just getting yourself into short-term debt that the banks see negatively.
Yeah.
Yes. So credit card is not something you pay off.
Yeah.
I know credit cards have the budget facility and all that stuff, which is good. And that could be viewed as a long-term payment feature. And it does, to my knowledge, reflect separately in the credit score, in the credit bureau's reports. But settling the credit card every month, first of all, it's interest-free.
Yeah.
You're using other people's money, right? You're leaving your money in your bank.
Yeah.
And then second of all, you're not getting seen negatively and from a credit card utilization ratio point of view.
Understood.
I think.
So before we close off, there's something called pre-approval. So you can get pre-approved for a car loan. And AutoTrader has actually just launched something similar on its website now where you can get pre-qualified approval on.
Well, we haven't launched pre-approval. We've launched a soft check called pre-qualification. Yes. So pre-approval is not a bad thing, but you've got to be careful of it.
Of what? Getting pre-approved?
Of getting finance. So there's a difference. Getting finance that is not from the dealer. Because in most instances that I've seen, you cannot beat the dealer.
Yeah, for sure. But this pre-qualification that's on the sites, essentially,
on our platform.
Yes.
This
is a way of seeing your affordability before you go ahead and do any of those extra
steps.
Yes,
it gives you an indication of would you get finance for this car?
Yes.
Would you get finance for this particular car? And you can go onto AutoTrader's platform and go onto the finance part, and you can even navigate from any car that you're searching on, where you can go and get what we call pre-qualification. Which means that we will check for you against your credit score, the car itself, and your affordability, and get you an indication. It's not approval.
Yeah.
It's just an indication.
Indication just before you go into the dealership, kind of knowing beforehand where you stand.
Exactly. But I would be careful of taking that too far, going to your bank, getting finance, and then going to the dealer and saying, I've got my own finance, I want a discount. You're not going to get a discount.
Yeah. Okay. Understood.
And if you pay cash for a car, you're also not going to get a discount. Cash is actually a bad thing for a dealer. Their dealerships their profitability models don't work on cash.
Yeah. I don't think anything does. Any sort of
Well, I mean, like we said in the beginning, the world works on debt.
on debt, yeah.
The world operates on debt. As long as you're familiar, you're cognizant of how to play the
How to
chess
manage
game.
it,
Yeah, how to manage it.
Awesome. That's pretty much everything that we have time for. So yeah, don't forget the show is actually, it's streaming live on cliffcentral.com as well.
Lovely.
But if you're watching this, then you know that we're also on YouTube. So that's from me. Any last words, George? Any last statements?
Go Leclerc.
No, again, every time. Hamilton, always.